In this edition of INN CEO Talks, I'm joined by Paul Locke, the CEO of Pan Asia Metals, and we're talking about lithium mining in Southeast Asia. Paul, welcome.
Good to be here, Stuart.
You know, for many of our viewers, they have not had an introduction to mining in Southeast Asia, and of course, they don't know your company. Can you bring them, give them an overview about Pan Asia Metals?
Yep, Pan Asia Metals is a reasonably small company where battery metals focus, so battery and critical metals. And the chief geologist, David Hobby, and myself have been focusing on Southeast Asia for about 10 years. So we're both Australians. So Southeast Asia is pretty close for us. Our projects generally focus on the Southeast Asian tin tungsten belt, which runs through southern Myanmar, southern Thailand and Malaysia to the Tin Islands in Indonesia. And people might not know, but Malaysia, or Perak, which is in this belt, was the largest tin miner in the world for a long time. And Phang Nga, where we are in Thailand, was the second largest tin mining district in the world for a long time. So we're looking for lithium pegmatites. It's a pegmatite belt, and some of the pegmatites have lithium in them, which is good for us.
So when we take a look at mining in Asia, is it a mining-friendly jurisdiction? And based on where you are in your exploration, are you close enough to the infrastructure that you would need to be able to get the lithium to market?
So there are a few big advantages about Southeast Asia. It's not a big mining jurisdiction, but it's relatively friendly. So when I use the term relatively, I don't think in any jurisdiction globally you can put your hand on your heart and say, I'm 100% assured of getting a mining license, particularly today with so much focus on environment and community. So it's up to each exploration company to really tick the boxes on environment and community and their social license if they want a mining license. And that's the same in Southeast Asia. You've got to do the same thing. But one of the big advantages of where we are is Southeast Asia is a very low-cost jurisdiction, and there's a lot of industry and manufacturing there. So Thailand and Malaysia actually rank about 25 and 26 or thereabouts in terms of industrial complexity. So there's a massive amount of industry, and our projects are very close to it. The reason there's a lot of industry there, a lot of manufacturing, is it's a very low-cost environment. So if you're mining there, you do have the advantages of being in a very low-cost environment. This includes labour and energy, and you're very close to processing areas to process and produce, in our case, battery chemicals. So I think it's a very mining-friendly jurisdiction, and a lot of our peers talk about Tier 1 mining jurisdictions. I can't call it a Tier 1 jurisdiction for mining, but I can call it a Tier 1 jurisdiction for processing.
So tell me a little bit about the geology of your projects. And then let's also talk about, are you focused towards the Chinese lithium market, or are you, because there's this now interesting divide, focusing towards the American market?
Thanks for bringing the geopolitics into it, Stuart. We have what are called lepidolite pegmatites. So lepidolite is a form of hard rock pegmatite or pegmatite, which is lithium bearing. So most of us know about spodumene, but there's lepidolite's a mica. You've got lepidolite, you've got zinwaldite, and then you've got pedolite and a few others. So it's not as large or as common as spodumene, but it is lithium bearing. Also, there's a bit of a grade difference. So whereas our brines range, from 200 to 1,000 ppm, our clays say 1,500 to 3,000 ppm, and our spodumenes from say 0.9% through to 1.5%. The micas, lepidolite and zinwaldite, and pedolite, which is not a mica, typically range from somewhere around 0.3% through to, say, 0.7%. Our lepidolite project is about 0.44% Li2O, so it's lower grade. The first question most people have about this is, well, if it's low grade, how can it be economic? And what's really interesting is Wood Mackenzie recently published several cost curves in the Tianqi IPO, their initial public offering prospectus. And it included lepidolite, which was at the bottom of the cost curve, or near the bottom third. And there's a lot of lepidolite processing in China. So it is cheap to process, particularly if you're in a low-cost environment and you're proximal to where you'll be processing that lepidolite. So all of our inputs are very close by and our markets are very close by. Moving on to the China-US story there, Stuart. Southeast Asia is an emerging battery and EV ecosystem. There are many car companies or auto companies represented there. In fact, Thailand is the fourth largest auto producer in Asia and the largest in Southeast Asia. And Mercedes is already producing its flagship EQS EV there. So our market will be the battery and auto manufacturers in Southeast Asia. Some of them will be Chinese, some of them will be European, and I expect some of them will be US. So there's no real geopolitics there. There's a lot of representation from a lot of global companies in the jurisdiction.
Well, that is an exciting geography to be in if your customers are right there and your production costs are low. That provides for robust opportunities ahead.
Yeah, certainly does. We're extremely excited. We actually have the only licensed lithium projects in Southeast Asia. When I say licensed, projects with exploration licenses. We do have some emerging neighbours, which is great. The more, the better, because it brings a lot of the, I suppose, the people and infrastructure we want, and the focus, investor focus. But we have the only licensed lithium projects where we're looking to produce lithium carbonate or hydroxide, most likely lithium carbonate, in Thailand, and we want to actually move into a joint venture to produce cathode active materials. So we're pretty excited. We've had a lot of discussions. We're hoping to deliver some great news along these lines during the year.
So what should be that next bit of news that investors should be looking for?
Well, we've got a mineral resource estimate update, which should be due, it's imminent, so due in the next 2 or 3 weeks. We're about to move from our current lithium prospect, where we've got currently 10.4 million tonnes at 0.44% Li2O. We'll be upgrading that in tonnes and then upgrading that from inferred to indicated and measured. So that means we can take it through to a preliminary feasibility study. And then we're moving across to our Bangi Tum prospect, which is 8 k's away. And at Bangi Tum, we've done some preliminary drilling where we produced a drill-supported exploration target of 8 to 14 million tonnes at 0.5 to 0.8% Li2O. But really interestingly, we just completed some field work late last year where we announced 44 or 64 rock chips were grading on average 1.56% Li2O. We had 12 above 2% Li2O with a maximum of 2.62% Li2O. And these are non-selective rock chips and channels. So it reflects what's actually in the geology. We haven't picked up the shiny rocks. So we're going to have some great drilling results out of there. We've also recently completed some ore sorting work on the Rionket project, and we took a sample which was representative of a typical mining situation that had effectively a head grade of 0.5% Li2O. We sorted that, got rid of 60% of the waste, and upgraded it to 0.9% of just over 0.9% Li2O. So basically, we've halved the beneficiation plant size with that. but the waste was mainly below cut-off grade, mineralised, poorly mineralised rock, or just waste material. So it's a fantastic outcome, and that's going to feed straight into our preliminary feasibility study, which we'll deliver this year. Then further to that, we've got other announcements brewing. I expect to be talking about joint ventures soon, and possibly some other properties.
That's a lot. It's a lot to take in right now. So what's the number one thing that you want viewers who are considering an investment in your company to take away right now?
Well, I think when investors look at a company, it's more than tons and grade. So tons and grade are great, and there's some great projects. I wish we had some of their tons and grade. But the reality is, when it comes to economics, it's all about your cost environment and how proximal you are to markets and what your recoveries are like. So we've got a very low cost environment. We're sitting right in the middle of our markets. Our metallurgical test work to date has shown that we can recover about 80% of the lithium in the ore. So I think those three takeaways are key to what's going to become a very exciting lithium project and a very exciting chemical processing add-on.
Well, it does sound very exciting, and I think that viewers here will want to hear from you again in the future. So I hope that you'll come back and give us updates, because, as I pointed out earlier, it's not a region that we hear a lot about from here, but when you add it all up, you've got an exciting future ahead of you.
Thanks, Stuart. I will definitely be back. I'm hoping I'll be back sooner than you think.
Wonderful. Thank you for your time today.
Yeah, thank you very much.